Well, it's the day after the election. A new president, Donald Trump, part deux. So let's go ahead and answer some questions from the last market outlook. I will, from time to time, maybe avert my gaze and watch the screen on the other side. I do have some nice short positions. Let's begin. Some of these aren't really questions, they're just comments, so I'm going to skip over a lot. What's your take on Buffett's selling and cash stockpiling? Well, I think he's a value guy, so I'm sure he sees the multiples and a high multiple, 22, even today with the market where it is, pushing 20, 22 and a half, maybe 23, because earnings aren't going up, they're coming down. Seems a little rich, and most of his positions have gone up quite a bit. That the question is, well, where does it go from here? So I think he's probably pulling money to the sidelines in anticipation that there'll be better deals ahead. I have money on the sidelines, and I've been hesitant to commit it. Only recently am I beginning to commit it more aggressively to the Canadian apartment REITs as they're pulling back. Can you please still answer the market outlook questions in another video? Yeah, I guess I can continue doing that. Is the relationship between the supply of reserves and money supply 1-to-1? Well, when you increase the money supply, that money has to go somewhere. I wouldn't say that it's 1-to-1, but it would be. No, I wouldn't say it's 1-to-1 because it depends on where the money sits at any given time. But all money that isn't in a real asset to be in real assets, there'd have to be an increase in the number of real assets to absorb money that wouldn't go into reserves. Fed sells bonds, M2 decreases. Supply of reserves decrease, M2 decreasing may impact the economy, but supply of reserves decreasing won't impact Fed funds rate because reserves are ample. That's true. M2 decreasing may impact the economy. I think you would have to decrease the money supply quite significantly at this point to begin to affect the economy, because it has been decreasing. I think something like 1.5% over the last year. And it clearly hasn't affected the economy. Let's see. Since CFA curriculum is broad, what topic areas should I focus on to develop skills for bottom-up stock picking? Bottom-up stock picking, you'd probably want to have a good understanding of industry analysis, right? And for that, the equity section at level 1, level 2 will help you out there. FSA, financial statement analysis at level 1 and level 2, and for valuation equity at level 2. Those would be the sections I would focus on. And microeconomics is useful. This is firm level economics, the economics of the firm. Macro is useful from a bottom-up perspective to understand, when you understand the macro environment, to understand perhaps, you'd want to start at the level of the economy, which brings you down to the level of a sector, and then from a level of a sector, you have a couple of stocks that you want to look at that you would combine both top down and bottom up. What do you think about Bell's $7 billion acquisition of Ziply? Found myself bad at correctly interpreting things after reading through BC Investor Relation presentation. If you have the applied level, I put a half-hour video up yesterday analyzing this purchase and what my best guess of it is. I think you'll hear more on the earnings call tomorrow. Bell has earnings on November 7th after the close, and then we'll have a conference call. I think they'll be able to say more on the conference call. They're in a quiet period, so the conference call they had for the Ziply acquisition, they really tried to restrict themselves just to that acquisition, but they couldn't talk too much about their balance sheet. And I think they'll do that in the earnings call. So I will put another video up Monday morning analyzing that and giving my best interpretation of what I think I would do. What do you think about investing alternative assets? Could do a video in the Applied series about this. Yeah, I guess. A few questions. Can I invest in the European markets using the option strategy you teach while in Australia and basically not be up late at night? Well, you'd have to be up during the European session. I mean, that's... So whatever time that is, that's the time it is. That's a hard constraint. I don't know how you get around that, but I imagine the answer is yes. If I invest long-term, I have my risk manager and risk management exits planned out. Do I need to be following the markets all day? You shouldn't have to. If you know what you're doing, if you have a plan, if you have a trading plan, you shouldn't have to follow it all day. Not if this is just a part-time venture for you. If it's really part of your life, like if it's part of your job or part of your significant income stream, or this is what you want to do, then I'd be in touch with it throughout the day. I wouldn't treat it part-time. I probably spend, well, some days I spend a lot more time at it than I wish. Other days, sometimes I don't even look at it. It just depends on what's going on. This is a big week. On big weeks, you kind of want to pay attention. But if you're investing long term, usually you can set a trade and forget it for a while. Does a retail investor need to follow the market from beginning to finish? No. Can you successfully be a retail investor while working in M&A or PE? Yeah. Well, I mean, it would depend upon your employer and what they allow you to do in a personal account, right? There are restrictions. I haven't covered all the applied level content, so I'd like to know if there's any video about fiscal aspect of being a retail investor. I don't know what you mean by the fiscal aspect. If not, would you consider adding a video about how to think about managing tax aspects? I can't do tax because there are 182 countries in the world. I'd have to know the taxes of 182 different countries. Or if I limit myself to the G7, I'd have to know the tax policies of 7 countries. I don't even know the tax policy of my country. I mean, I have to research different things, and then it's not helpful. Of all the exceptions and if this and that, put it on this line, then fill out this workbook, and you got to go to a workbook and you got to get more information. And if it's above this number, go to line this. If it's below this number, go to line that. No. I'm not touching taxes. Taxes, that's on you. That's on you and each of your own respective countries. Elaborate on the effects that fraudulent accounting practices tend to have on public companies. It's fraud. I don't know what you mean by what effect it would have on public companies. I mean, I think that's such an obvious answer that because it's such an obvious answer, that can't possibly be your question. So I'm not sure what you're asking me here. Are companies normally bought out after something like this happens? No, not normally bought out. No, usually. And a lot of times it leads to sometimes the complete destruction of the company. Criminal charges, I mean, it can get really ugly. You listen to Joe Rogan with Trump. Did you tune in to the recent one with Elon? Nope. No, I did not. You mentioned in the video that if TLT keeps dropping, you might tap out. What do you reckon would be the best way to play that? Simply closing out the position or selling at the money and the money calls? It would take a lot for me to exit. When I say tap out, it means I would leave TLT and I would just go into U.S. Treasuries. I would go directly into the U.S. Treasury because the U.S. Treasury at some point matures towards par. TLT doesn't have to recover. TLT can go down and go sideways for the longest time, never recover. But if I go into U.S. Treasuries, I always will. I always will. So tapping out just means I don't need the ETF. I'm just going to go for the bonds directly. What is the reason for the Fed stopping balance sheet runoff and even buying treasuries in April or May? Because they want to keep reserves at ample. If reserves fall below ample, they don't want to have to manage the interest rate and manage reserves at the same time. So if they're on the insensitive part of the reserves curve, the demand for reserves, if they're on the insensitive part, which is this part over here, as long as they stay on the insensitive part, no matter where they change the rate, it's not going to have much of an effect on the level of reserves. Election. Okay, what do you think about Palantir? Will they be able to increase margins over the coming years? I don't know. Where do you see the stock? I don't know. I don't know. I don't really follow Palantir, so I don't know. Will they be able to? Sure. Where do you see it? Higher? The same? Lower? No idea. How could I play ZQ if I cannot trade futures? ZQ are futures, so you can't. You can't. The interest rate is only available, the effective federal funds rate is only available in a futures contract. What do you think of Bell? I already answered that. Which software do you use to prepare your slides, notes? I use Sketchbook. Let's say E-mini S&P 500 futures rising ahead of the opening bell. How do we interpret that? We often learn that there's no expectations in the futures price. All that is saying is the underlying stocks are expected to open higher. So it is just the culmination of the expectation of what the opening auction will be, and it will correct instantly on the opening. As soon as they open, the futures will reflect the no arbitrage price. So when futures trade when the market is closed, so what we can infer in the futures is what the market thinks the underlying stocks will open at the next day. And there is no arbitrage opportunity because you cannot short the futures contract and buy the underlying because the market is closed. But as soon as you get opening prices and it starts trading, you're done. There is one trade that just happened. I covered a short position, which was nice. Very, very good. The market was stupid green this morning. So I was up at around a little after 4, and I looked at it and I thought, I can't let this go. So I sat up in bed and I just started shorting things. I short IWM, I short SPY. I just started shorting everything. You had REITs, a REIT index, IYR, up significantly while long rates were up significantly. Long yields were up significantly. That cannot be right. One of those two things is wrong. So, short. It's so far been a fairly good morning if I don't look at TLT too much, right? And IWM, Russell is coming down 234. SPY tried a couple of times to stay at the 59.30 level or higher, coming down again, which is good. Have you thought of adding more top-down modules in the applied series? I feel like this, along with understanding sectors, is more important to becoming a better investor than financial modeling. Financial modeling has huge demand from the CFA side, but other than the analyst part of financial modeling is your bottom up. If you want to be a better investor, do the analyst part of the financial model. You don't necessarily have to do the financial model. So what you would do is, instead of forecasting out 5 years, you'd only forecast out 1 year. And you'd think about, well, what assumptions am I making to forecast out 1 year? Then you do some sensitivity analysis and you find the 1 or 2 drivers that really change earnings per share. That's what you're paying attention to. So as soon as those 1 or 2 drivers are in question, either have headwinds or tailwinds, you know exactly what you want to do. There's no hesitation, no thinking. Will this affect it? You've already done the analysis. Yes, it will affect it. So that's the value part of it, is it helps with the bottom up. But as far as doing a 5-year forecast on the income statement, the balance sheet, the cash flow, finding a terminal value, doing a discounted cash flow, no, you're right. That doesn't help a lot. Can we know all about a topic like what drives oil prices? You can have a good idea. Over years and years and years, you can get a very good idea, but it's still just a good idea. You'll never be 100%. A rookie can be 50% simply by just flipping a coin. So that's your benchmark. You got to be better than 50%. So if all of your thinking gives you 30% right, you may as well just start flipping a coin. So you've got to get smarter than a coin. And as you learn more, you'll find that, well, I'm about 60% right, then 65, then 70. The really great ones might be 70, 75% right. So there's that part. The second part of being successful is learning how to size your trades and learning when to exit your trades and risk management. Usually, an analyst will have a trader, and the trader will know how to get all that done, and the analyst just says, okay, get me in, okay, get me out. The trader will say, well, I can get you out at a better price than just closing. So there's the trader who knows how to do the positioning in the market. The analyst knows how to analyze something. Someone asked a question, what if stock ETFs, should I be sticking with an account size of 2,000? You said I would not go much outside the market. What do you mean by that? Whatever your broad market index is. In the US, the broad market index, large cap, is SPY. I don't know that you would go outside of SPY. If a stock or trade goes according to your analysis, will you say your analysis was 100% correct or on point? Well, I wouldn't say it's 100% correct. Leave some room for luck. You might have just gotten lucky. The stock might have went up for different reasons than your analysis. So let's say I analyze a stock and I say, I feel fairly good that this thing is going up. And then something happens and the stock gets a buyout and it goes up. Well, it went up, but not for the reasons I thought, right? So that doesn't mean I'm 100% right. I was right in a sense that another person saw the same value I saw and bought the whole thing. And then sometimes you're dead wrong, but the market is on a strong bullish trend, so the stock you thought was going up goes up, but for no other reason than the beta component within the stock and not for the idiosyncratic risk component that you thought about. So no, it does not mean you were 100% correct. Personal take on potential career from finance to tax accounting. Oof. Currently a senior credit analyst at a regional bank in the U.S. Given the status of the banking industry over the past couple of years, there's been some layoffs to my team. Also with the bank mergers, acquisitions, I'm wondering if this will lead to further bank consolidation of departments and lead to fewer jobs. Taking the necessary classes to sit for my CPA, and I understand tax issues relatively well. I don't know. I cannot answer that for you. But what you just laid, it would be like me saying, what do you think of me changing my workout routine? I mean, I'm lifting heavy and, I do injure myself and get nerve pinches now and then. I find that when I lift light, it works better for me. I don't know how much longer I can keep lifting. What if I laid the whole argument out for you? Wouldn't you say to me, sounds like you already made up your mind. You're just looking for somebody to say, yeah, sure. You've laid out an argument here. It sounds like you've already made up your mind. You have taken the classes, including Tax 1 and Tax 2, to sit for your CPA. It sounds like you're already on the pathway. It's kind of like running into the ocean and screaming to your friends, hey, do you think I should go in the ocean? You're kind of already there. So I think you've answered your own question. Preparing the popcorn. I try to watch market updates every week. I'd love to watch more of your analysis and join your lives, but I'm studying for CFA. Well, that's fine. Whenever you have time. FT article discussing the rise of buffered ETFs protecting investors from the first 10 to 20% of loss. Could you comment on how ETF managers can achieve that return profile? You buy a put and then you sell a put. You have put spreads. You just buy put spreads. So it just protects you from a certain percentage of loss, but it does lower your upside return. It'll have lower volatility, protect you from the downside, but this is something you can do yourself. Will you attend Karl Marx lecture if you have a chance? My minor in my PhD was sociological theory and spent quite a bit of time on Marx. And Marx, for his day, was probably for his day was more correct than for today. What Marx missed a lot, what he didn't see, was the rise of a middle class. If you have a middle class, most of what Marx talks about gets nullified by that. What's your take on election betting through Kalshi? Well, yeah, I don't have a take on that. Tapped out on TLT Friday, selling cover calls to generate income, so my base is in the low 80s, but the narrative that's being portrayed in the media that higher yields will be required to entice investors to hold U.S. debt is just not worth fighting. It is a narrative that has a life of its own right now. I don't know how long that narrative will last, because I don't know. Well, we'll put it this way. A narrative without fundamentals can live a long time. The fundamentals of the U.S. credit market, Treasury credit market, could take a long time to play out, which means, yeah, TLT could be under pressure for quite some time. I don't think so. For a big reason would probably be rebalancing. At some point, pension funds have to look at this and say, you know what, this is pretty good. So let's take a 60-40 portfolio, right? Bonds have gone down and equities have gone up. You might now have a 70-30 portfolio. So you've got to sell equities and buy bonds to get back to your 60-40 portfolio. So all funds have a strategic asset allocation. And you've had over the year quite a, even just this quarter, quite a move in equities and quite a move in bonds, to the point where, well, some rebalancing is going to happen. And we're talking trillions of dollars in institutional money that tracks an SAA. They're not just going to abandon the SAA. They're gonna rebalance back to the SAA. So just on that alone, I'm okay on bonds. But yeah, that narrative can, you need to beat that narrative up for a while, I think. Definitely here for election day. Wouldn't the Fed jump in and be a buyer at the long end of yields rose significantly? Yeah, Trump will force it. Trump will force it because he probably has exposure to real estate loans. And this will just make, especially on the commercial side, that'll just make real estate loans more expensive. And that will trickle back to him from his kids running the business saying, hey, can you do something about interest rates? And sure enough, he will. He will. Right? So it's just one more reason why, and I had laid this out in my TLT argument, one reason why I think rates go lower. How do you take on a position on currencies? Is the best way just to exchange CAD to US? You can do that. That way I get hit with a spread from my broker, though. You shouldn't. If you have a Forex broker, you should be trading at the spot. If you had to make a case against TLT, what is your strongest argument? The narrative. A dominant narrative in which the fundamentals, which will be the truth of the matter, will take some time to show up. It might take a year for the fundamentals to show up, and then show up slowly over time. It's going to take 3-4 months before we even know what his policies are when it comes to spending cuts. The sooner he announces that he is concerned about the bond yields, that he's concerned about the bond market, that he's going to balance the budget, he's going to cut spending out, the sooner he announces that, the better it's going to be. The RRP and reserves numbers are getting really low. Yep. Where do you get these reserves? You get them, you can Google ONRRPNY Fed, or you can look at the Fed balance sheet. That is published every day, Wednesday night, I think around 3 o'clock. It's published, and scroll down to the liabilities. You'll see reserves. You'll see 2 lines. It's the second line, which is the money market mutual fund use of reserves. If liquidity disappears from the system due to not enough mentioned reserves, equities will crash. The Fed will stop balance sheet runoff before it gets there. It'll stop. It'll stop. And if there's any issue in liquidity, they will flood the market immediately. You predicted discussion about deficit. Now, what would you tell about relaunching bonds, buying the Fed? I don't think that they're going to be ready to talk about this till maybe second quarter of next year. I can see the narrative of not enough liquidity in the system. China's selling bonds, so we need to overcome this. Do you have a limit on how many questions one person can ask you in a YouTube live? Well, I don't have a limit, but when I see the same name again and again and again and again, it's like, okay, look, let's give somebody else a chance here. ADP is based on ADP's clients. That's true. These are only private without public government employment. It's usually revised in subsequent months. For sure not a key figure. That's true. How to know if I really know a concept, if I really know something, maybe about finance or any other stuff. Because many times when time testing comes, I hear others, I feel I don't know, but I thought I know. Well, if you say there's so much I don't know, that means you know something about a topic. If you say I pretty much know it all, you don't know anything. You don't know anything. So that would be my best test. Can we know any topic in finance or any stuff completely like 100%? Nope. No, you cannot. There's just, in a complex system, there's too much involved. I live in Canada and acquire continuing education credits yearly for my job. Do you give out CE credits for the applied program? CFA allows you to self-report, and it's anything that's educational you can self-report. So it would be a matter of, well, what qualifies as a CE credit? Most places you do self-report, but since most of the applied level is education, yeah, it would apply. TLT could rally over the next week on uncertainty. I don't know. Let's have a look at it right now. Hang on a sec. Well, it's sitting at the $90 level. I don't think it's gonna. I think it might be waiting for the Fed at this point. Yeah, I don't know that. Yeah, I'd say it's waiting for the Fed. If the concern is about the sheer amount of debt and how unsustainable it is, shouldn't that push yields down? No, because you wouldn't want the debt. You'd want to be paid more to hold the debt. I believe that was one of your arguments at some point, due to what higher rates would do to the economy over a prolonged period of time. Yeah, but the market is not here to save the economy. The market's not going to say, oh, we better go and buy bonds. We need to save the economy. That's the Fed's job. All right, the market is just making an assessment of the value it sees. Haven't heard you talk about agency a while. It's trading around 932. Agency will trade with yields and the availability of mortgages, and the higher mortgage rates go, the less availability there are of new mortgages coming in. So until the long end of the curve drops and mortgage activity picks up, agency will go sideways. Mortgage REITs will go sideways. Maybe as you add reference the reason for taking each. Okay. U.S. probably won't know who won until Saturday. I found out this morning. It was actually rather quick. It was clear last night, my time, around midnight my time. It was pretty much clear that Trump had won. It just, some states hadn't declared yet. 80% counted. He was up, 56% of the votes were for him. He was winning the popular vote. It was clear that he had won. All we needed was a couple more states, and there's still some states that need to settle out, but he's at 277. He's period the winner right now. Period. Get ready, Trudeau. You are next. Yes. That will be a celebratory night, won't it? ADP is always wrong. I don't know why we pay attention to it. So stop paying attention. Stop mentioning it and showing it to us. It's not me paying attention to it. It's the market reacting to it. And because the market reacts to it, I have no choice but to pay attention to it, because it reacts to it and it messes things up. So it is the always wrong ADP. If it were just me, I would just delete it from the calendar and no one would ever hear of it and no one would ever know. No one would ever care. But it's not just me. I don't get to decide what the economic indicators are. So it affects the market. I can't ignore it at that point. What is your approach when dealing with futures? Is there a rule that you use to decide the liquidity to cover the margin? Not really. Are you planning to make an applied future series? I have done that in the options. In applied options, you will find a folder for beta and duration. One is for equity futures using ES, and one is for bond futures. and there's things you got to know about bond futures. So you'd want to read that, watch that first if you're going to do bond futures. And that was a short one this week. I think it's because I did the live event. Next on Sunday, the market outlook will be up, but we won't be doing a live event Sunday. We're going to move the live events to Wednesday night. I think midweek and at night just makes a lot more sense. And that will take us through this one.